We're kicking off already, so let's go ahead and get started. Good morning, everybody. Welcome to another Engineering the Markets. My name is Jared, and it is December 8th, 2022. Happy Thursday. This will, of course, be the last Engineering the Markets for the week. So, as often we do, feel free to ask questions near the latter half of the session. We'll look at any tickers or try and kind of provide additional context to anything that we often discuss. But let's take a look at our short-term picture here. Let's talk about where we are in the S&P. We do have jobless claims coming up after the session. So if you are in trading terminal on the calendar economic section, 8:30 market time, initial jobless claims and continuing jobless claims. This is a fairly significant data portion for the market. So I would expect some volatility off of this. As I mentioned before, the market is highly sensitive to data at this point in time. And until that, pattern breaks or we see less sensitivity to it, I would expect similar volatility to come from data like this. So let's talk about our short term. So S&Ps yesterday were, for the most part, relatively range bound. There's a concept in something like market profile theory, along with some of the price activity that you can start to observe as the session is forming. And usually it's derived around relative risk positions in the morning auction phase. Usually things like relative highs are very important, especially if they are established within, let's say, the first 30 minutes of the morning session. I would also argue that you have to be careful with drawing some of your highs and lows. I often find traders don't necessarily mark the levels correctly in terms of they're looking at the absolute high and low, when in fact, if the response to a low is a failed low or some sort of liquidity like test, then most often than not, the previous spike or the previous low indication is the actual support. And oftentimes you can verify this if you're looking how to draw levels. Oftentimes the market will respond much more adeptly to the support versus the test. So for example, if we assume this is support, you'll notice that the market offered 2 additional opportunities to actually touch support and respond with, at least for the session, lower high bounces, something that would be akin to a oversold or some sort of support bounce trade. Whereas the liquidity test is not necessarily something that was even responded to in the session at any point in time. There really wasn't another confirmation of that low. So drawing levels is often a little bit of a skill in the technical world, and there are variants out there, but oftentimes the argument is if the low that was created came from a break of a previous range or something of the like, the last low with closure is often the support. And this is kind of how this particular low happened to form, more akin to like a very short time frame here. You'll notice that we're getting closure underneath the morning low, but afterwards there really isn't any further response except for the test, which will be breaking the trend. And that's kind of the important part. Knowing something as a test is often followed by breaking trend. And that's usually how you can kind of tell the difference. So the morning trade for the most part was range bound. And we saw most of our continual trade often doing a lot of tricks and traps A lot of tomfoolery in regards to how stocks were set up. But there was some potential opportunity here. There were some channel-based trading opportunities, both from the lows to the highs, along with some of the short-term trade, which happens to follow usually some minor trend lines. You can kind of see that as we're claiming higher highs and higher lows, we are pulling back significantly. And yet, during this period of the session, there really wasn't a short sell in regards to a full range transition. You had to get back to the high, reject, and then, of course, see the collapse of that section. So why is this happening? Where are we in the S&P? We're pretty much at range support on the bigger time frame. Usually at support, the first thing that has to start happening is the opposite party has to start taking profit. Bears have, for one reason or another, positioned themselves off of the highs of this trend line that the S&P currently is still rejecting. The bearish positions are comfortable at this point in time because they have the opportunity for the market to roll down through this range and then subsequently hit something like our next support level, which is much, much lower than where we currently are. You know, probably another 5 to 7 S&P dollars, or about 50 to 70 S&P points. Additionally, I would find that the gap that was created to get price into these extremes is of a characteristic significance due to the fact that it is a reversal style gap. Usually when gaps form, they can form in one or two ways, usually through continuation. We often refer to those as just runaway, or sometimes like a breakaway gap if you're getting out of a range. This one, however, is a bit extreme because the previous session was a sell session. It was actually an attempt to break trend. That attempt failed, and then a massive inversion of the price chart got us over resistance. So those types of gaps are structurally opportunistic when the market comes back into them. Oftentimes they will fill. And while it can be a bit tricky to figure out the downside target on such an extreme gap, a very conservative target would be to either fill to the top end of this session, or we could look to just get to the lower high, which is essentially where some bears might be trapped in the attempt to break the trend on previous S&P trade. So these levels offer some indication of support, but they also offer the bears targets. Forgive me, my voice is still a little shaky here. They offer the potential for bears to have targets. Usually trade can be a little challenging when you start to break trends, especially if that trend continues, because the objective here is to use previous levels in order to find where the market may be headed. You want to find where the most participation was, and as well as using technical breakout zones to find where you think the market's going to fall, and just allow for the structure of the sell swing to kind of dictate some of that as well. You know, for example, the market for the most part fell about to these lows before seeing a lot of testing going on. We really haven't broken down from this point, but most of the selling occurred from that high to that low. So as far as extensions are concerned, once we start to pull back in, we can make similar sell swings, but we don't really know how high this bounce is going to be. It could be a back test of our trend line, and at that point, looking around SPY 380 makes a ton of sense, both technically relevant, volume profile relevant, and if a back test forms, it would be measured move relevant. It actually would reflect the extension to the downside. So in that nature, and if you're looking for that opportunity to kind of take advantage of, one thing you could consider is going short, or being bearish the market during this period of time. There's plenty of ways to do that, but given there is some technical relevance to the price level that we were identifying, and given that the option market kind of tells us how far can the market move on any particular time range through something like the expected move, we can often just find option series that allow for us to set up bearish trades that make sense for the target. And this is a pretty simple strategy for bearish and bullish trading, but a lot of option traders just like it because it's simplistic. It defines your target, and it also is a very clear risk to reward. So for example, if we think the SPY, let's say, is going to about 382, right now we're at a pretty strong VPOC. As we know, about 395 is hard for the market to move away from. But if we pull back in, reject, and then come back down, anything of that sort is still bearish. Technically it would be confirmation of a downtrend. And in doing so, having a position on to take advantage of that might become opportunistic. So the market moving higher would mean that, let's say, we could get to 400. That would be an ideal back testing range, ideal price to kind of reject against. And then from there, pushing lower to about 380. So all in all, the market has potential to move higher $5 to $7, and then to move lower $20 from that price. You may want to look at option series that accommodate that expected move. For example, if we're looking at today's pricing, we are priced at about 393, well, 395 as of the pre-market. Coming into 395, we're still looking at about a $15 downside move, but we expect there to be a little bit of an upswing in the form of a backtest. So the market, at least for now, indicates that as of December 21st, the market itself can move plus or minus $15. That would be within the realm of probability. It's a higher probability range within about 68% likelihood, assuming that the volatility stays constant. So this series would be probably the minimum amount of time to set up a trade that allows for the S&P to not only perform its backtest, which may take a couple of sessions, along with actually selling through, and why it's selling through. Something like the FOMC would be an example for next week, or just any data catalyst coming up before the end of the year. Now, obviously, this is right into what a lot of people are looking for, which is the Santa Claus rally right before we get past the Christmas holiday. But this particular series is right before that holiday. So it is not within the realm of, it's not improbable that the market could still correct lower before we get any sort of recovery leading into the new year. So how would a trade like this get set up? Oftentimes, traders are looking at verticals for these types of trades. They're targeted, measured, and defined risk types of opportunities. And usually they're trying to simply get a good risk to reward relative to the target that they expect. So while this is not necessarily the most ideal series to trade in, just because it is the minimum, width of necessity for getting down to that 380 target, you could kind of speculate a vertical that looks something like this. where you're essentially buying at the money put premium. So at 395 if the market opens today at about that price. And your target is approximately 380. So what you've done here is you've bought a 395, you've sold a 380. You're essentially betting that the market will go to around this price, and you don't really know if it's going to go farther, but you also know that getting through this area would be quite challenging. There is support there, and for the most part, you can even tighten this up if you don't believe 382 will be fully achieved, although it will cost a little bit more. Actually, no. Why is it costing more? Looks like the pricing's off right here for now. This price should not be as high as it's showing. It should be a little bit lower. So what does this look like from P&L perspective? How would this work as a trade starts to mature? And what are some of the positives and negatives of opening a vertical? First things first, it is defined risk, but it's also defined reward. If the market were to crash, and let's say the market goes to 350 or something of higher significance, just the most extreme example just being to retest our lows, then vertical will be profitable, but you'll only make the difference between the long put strike and the short put strike. This difference right now is approximately, or it is $15, but you're paying, at least as of now, $5.80. So the most you can make is $9.20, and that's of course times 100. So $920 would be the max debit you could collect, or profit you can make on this spread. And you can kind of see that as you look at a P&L graph. If you notice the 920 right here on the green line, this is at expiration, but it's also true that if the market were to go way beyond 380, this is where that P&L would be fully realized. If the market, let's say, hits target, and this is as of today, then this will grow in its profitability. It's showing here that you'll make an additional $383. But remember, this has to happen today. So this is more about as time continues, and the market may take, let's say, the full time frame to get to that target. Let's say we're giving it a couple of days prior to expiration. Your 380 target, this particular trade would have doubled in its cost. Approximately, we were paying about 580. It would at that point be probably worth about 1,000 or 10 for the debit. So obviously we're always looking for good risk to reward, and the objective here is that this thing could turn into a doubling or a tripling depending on how far and how fast the market gets to 380. But what's important to realize here is that I'm not necessarily just going out and buying a put. The put by itself is very expensive, at least relative to something like this trade. And even more importantly, I'm not necessarily looking at a market that has unlimited potential. I believe in this case that there is support at this price, and therefore I want to do something to reduce the debit paid while still being bearish in this particular time frame. And that's really what a vertical is all about, is you're essentially using the marketplace to sell some of the premium, but further out, closer to the target that you assume we're going to hit. And remember, you don't necessarily have to look at these verticals as if they're going to that price target. You can tighten these up as much as necessary to make the cost worth the risk to reward. It also becomes a more probable event if you are to sell something a little bit closer to your purchased put strike. And then last but not least, remember that these do not have to go to expiration. As long as you're happy with the move, and especially if it's a faster move, usually having the stuff on before a big move is opportunistic, but it also helps in the case where the market doesn't go down, because it'll hold its debits much better than a put would. It won't decay as fast. And it allows you to kind of stay into a trade while the market is somewhat churning or going a little sideways, with the understanding that we do need to break this first support to start to move to that lower rung, that lower support level. So this is how I think about option trading. Usually it's not just about being bullish or bearish. It's about where, excuse me. It's about where am I bullish or bearish, to what price, and how are we getting there? Are we doing it quickly? Are we doing it after some testing? Are we doing it in such a way that I have to get through other participants to reach my target? Or is it more open-ended? So be thinking about that anytime you construct a trade. And remember, you can play around with this kind of stuff. You don't have to buy the 395. In fact, there are some high probability of profit trades that simply do something like buy and sell a call and a put in the money and out of the money. It's not going to be a home run trade, but the market doesn't have to move much, especially to that direction, in order to realize a debit appreciation. And usually this is just when you need some sort of exposure to that direction, but you're not willing to pay or accept a high risk. You can kind of play around with these, usually trying to get the debit down to a little bit under $1 if you're going to take something like a $2 wide vertical. So yeah, that's pretty much all I wanted to say today. So I'm gonna let the questions kind of roll in if y'all have any. There were a few charts that people wanted to look at, so I'll quickly go over those. So we wanted to look at Tesla. And I think the best way to think about this is the market right now is just starting to sell off from a pretty significant rally. Tesla is almost at its 52-week low. So it's worth mentioning that Tesla is relatively weak. The thing that most people are looking at is something like the 200 period SMA on the weekly for Tesla. It is obviously in every other form and function, it's in a downtrend. But a lot of people see the potential for this low to hold, this moving average to provide support, and then last but not least, something like the previous higher low before we started to break out. And usually people will look at both sides of this range, but if you've broken out of a range and made such significant progress, I don't often expect bulls to defend the top side of that range immediately. They usually want to see a new setup. Like I wouldn't expect necessarily the price to spike it and react immediately. But these three levels are kind of the most important for Tesla. This one's important because it defines the high end of a trading range. This low is only important because it's the highest low before we broke out. Therefore, it's the first bullish support if we enter back into this range. And it's obviously the deepest support that a lot of people would want to see. But along the way, and I would argue that this one has already been breached to some degree. I'm not really seeing what I need to see at this low quite yet to assume it's going to hold. The one thing that's in between is the moving average. The issue I have with this analysis is we haven't really been at this moving average in a long time for Tesla. The last time we've been touching it is a breakout. So it does have significance and it defines sentiment. You know, this is when Tesla essentially went into a bull market. But because it hasn't been tested from the top side, we have to watch and see how it responds to it. I do think there is a dip trade there, some sort of weekly bounce trade that would be very likely once we get there. But remember, big picture, Tesla is an extremely weak stock. It is still struggling while the market has rallied 17%. And it's important to note that because these rallies are also equivalent in their percentage, but the overall perception of the chart is bearish. This is still a 20% bounce. It was just faster. It took a little bit longer to form. And during this period, we're giving up more of it. We're giving back a lot more than the S&P. So it's still a weak stock. You have to quantify that somehow. Apple, let's look at Apple. And then if there's anything on YouTube, feel free. The way I like to view Apple is it's leaning. It's not super bearish, but I would not want to step in bullish outside of a lower high type of bounce trade, because for the most part, unless the market is rallying off the lows, Apple has been more or less struggling. Big picture. Most of these bounces have either led to lower highs or they're starting to kind of form bad structure right here. Especially this one, I think left a lot of people kind of wanting, and we got a pretty strong reaction to earnings, but it was a lot of option trade. It was that gamma release of a Friday option trade. So there's a lot of investors that are somewhat parked in this stock. And if you know the price that Apple loves, it's 150. You know, this relative price of value, 148 to 150. It's a shelf. It's a massive shelf for Apple. Every time we lean lower, it has the opportunity to break away. And fortunately for the S&P, it hasn't quite yet. It's been kind of holding on this very minor trend line. The issue that I have is that if we start to lose it, the downside risk here is fairly significant. For a stock like Apple, I could easily see it going to 125 on a sell swing of a very minor, volume. And then if things get really extreme, we start to look at these similar concepts where what moving average on what time frame is going to protect this stock. And if I'm looking at the same evaluation as Tesla, the moving average that actually acted as a support is super far away. It's not close to the price. So it's a good thing to see it hold here because it allows that MA to catch up. But look, we've been extended from this MA for a very long time. And the risk to the market is that Apple is part of the sell or part of the pressure back to the downside. So that hasn't quite happened yet. Most of the time, Apple's able to hold in there, but it doesn't look great. It's not a great trending stock right now. It's just a reactionary stock. It usually has inflections. And because it's not really trending super well, it's probably better as a day trader. But if it ever starts to push lower, I would expect this one to sell into some of these regions that have been untested for quite a long time. So Labu and gold. So I'll quickly go over Labu. This is leveraged, I believe. Yes. Labu. Yeah, leveraged. So technicals here, I don't like doing technicals on leverage. If you're going to look at the sector, something like XBI is better, or just figuring out exactly what Labu tracks, because I'm not sure if it's exactly tracking this ETF, but it's going to be tracking one of these for the most part. And the technicals on XBI, we kind of went over them recently, but they're kind of flat. Short-term channel, relatively bearish structure. If it breaks kind of a lean to the moving averages, and most of the bounce has exhausted off the monthly supports. So the picture here is that it could sell back into probably like your daily range highs, and that would be fine. That would be normal. Um, it would equate to something like this move, and then once it tops out, coming back in like that. So nothing really has changed on the channel that's formed, but if it does, I would expect a lower move. Okay, I saw one more gold question, but data's about to drop. You should be seeing it now. Stay tuned for pre-market prep. We'll talk more about this next week. Have a great weekend and rest of your trading session. And yeah, stay tuned.
All right. Good morning, my friends. Welcome to the pre-market prep. I hope everyone's having an amazing morning. Hopefully, you guys had an incredible day yesterday, although it was quite messy on a lot of our stocks. Good morning, Norm. How you doing today?
Good morning, brother. I'm doing well. How are you?
Doing good, my friend. Doing good. Um, Guys, let's get into some of the stuff from yesterday. So here we go.
Do we have
So
to?
I know it was ugly. We're gonna go through this very, very quickly.
Yeah.
If you look at the SPY first, let's look at that from yesterday. It was right over here. It actually traded better than many of the tickers that we had. Hold on a second. Let me get 12.7. Here it is, and that doesn't say a lot, by the way. Oh, there we go. All right, so right over here. So this is by yesterday, and if you see all the stocks that we had in play, as we go through them, Baba, especially Baba, look at this, just identical to what the overall market was doing. So again, the SPY looked better than some of these. Look at Tesla here; it had one initial pop and then just goes sideways for the rest of the day. Amazon in the morning actually turned out to be really good, a nice open range breakout. Paris took this. I took this. Some other people as well. It didn't run, but it gave you a nice almost 60 cents pop here. And if you took it from down here, even better. But then if you look at the bigger picture, like the entire day, it did nothing. Absolutely nothing, just sideways. And this was kind of the song and dance for every single tickle out here. Norm, what are we waiting for? What is the market waiting for to give us some some good movements? I mean, it just seems like everything is just sideways.
Inflation data next week.
Yeah.
CPI on Tuesday, Fed meeting Tuesday, Wednesday, FOMC policy announcement Wednesday. I think when Powell spoke and we got that big move a couple of weeks ago,
Yeah.
I think that kind of front loaded what was taking place in the last couple of weeks, and now people want to see if it's going to be confirmed that with if inflation continues to cool off a little bit, even though it's still high, and also want to see what happens at this policy meeting. So it'll be interesting. We could have some decent days here and there, but obviously we don't really have earnings that we're dealing with right now. Or there are some loan reports here and there, but most of earnings season's behind us for third quarter, and I think we're just waiting on that. People, the Santa Claus rally that we often have, people waiting to see if that happens, but a lot of times we rally between Thanksgiving and Christmas. Peter put up a good piece of information the other day that when you're down as much as we are, especially as much as we are, year to date, up until November, that sometimes you don't get that rally, or you don't get that rally a good chunk of the time. So we'll see. I mean, the market's just lying in wait right now. Initial claims and continuing claims came out this morning. They were in line with expectations, right around 230,000 for initial claims. So job market's not cooling off, not appreciably, at least. Continuing claims are rising a little bit week by week, but the Fed now sitting back waiting to see if what they've done is going to have how much of an impact, and if it's going to get inflation closer to their 2% target. We'll see. It's going to be a while.
Yeah, definitely waiting for some more information to come out and kind of shake things up a bit. On our gappers list this morning, I thought we saw some in the red, but I guess they have, let me make sure my trade ideas is live. Yes, it is. So nothing gapping down, a bunch of stuff in the green today as the SPY is just shy of 1% right now. So trying to get going there. Couple of names in here, some that we are very familiar with, are Chinese tickers. Looks like the whole batch is here as well. So a few things happening there. Yeah,
China is on our list.
it's just put all those into one group there, but they seem to be gapping up sizably today, 4%. I see some even as high as 5 and 6 with Lee and Express. So let's dive into that. Let's start with CIEN, excuse me, Cieng. We've seen this before, I think. Yeah,
they pop up from time to time. Telecom company, they had earnings this morning, pretty decent, so they're getting praised for that, obviously.
Yeah.
Thank you,
Not a
Brian.
great trader, I think, on this one. Volume seems very, very light. This morning they have 186,000 with a big move. I mean, they're up 16% here, guys. Maybe today it could be some opportunities. I still don't like the daily as much on this one. And the volume just has to get better, hopefully. So possible for now. I do like the gap up today. Let's see if that could turn into anything. Here's Billy. Billy's up 10%. So nice pop for Billy today. 1.5 million shares traded so far. They're leading. Billy's kind of the highest one when it comes to our overall Chinese companies here and tickers. 1.5 million. Norm, any news? This is a lot of volume for them. I
China.
think. It's just overall China news on this one. Wow. Okay. They're pushing some heavier volume.
They got an
evolution,
upgrade
man.
too, I believe.
Oh, okay.
But that's a big move for an upgrade.
Yeah, it is. It is. So putting them on my list. We haven't seen them do this type of volume and gap up in a while. So definitely in play today. MLCO. This is Melco Resorts. I don't see a lot going on here. They have a gap up of 10%, which is nice. But as far as volume, not seeing a whole lot happening
More China stuff.
at the moment. Oh, this is a Chinese ticker as well. Okay.
Yep.
All right, we're gonna look for better ones to trade. Like Lee and probably XBEV are gonna have better pre-market activity and better volume for sure. And we're seeing that now. Here is XBEV, which looks really good, guys. 824,000, up 6%. Lee is also looking good as well. You can look at either one of these. I'm gonna go with XBEV on my main list. We'll do that for now, and then we'll put Lee as a secondary because they're not bad today. They're both good. We can come back and fine tune this later. Here is Futu, which I kind of stay away from. Lighter volume right now, up 4.6. AMC is up 4%, but again, we need massive volume on this thing. We're not getting it. They're reporting. I thought I heard Jai saying they're reporting. Is it today? Today after hours? Yes, after hours for AMC today. So they'll be moving tonight, and then they'll be hopefully in play tomorrow. Let's see what takes place there. Looking at Neo, one of our favorites when it comes
Remember
to
Ape?
Sorry?
Remember Ape?
Yeah. What happened to that?
Take a look and see what happened to it.
Oh my.
It's more like a weasel.
83 cents. What? Man, this is what a joke. What was the point of this again? Was this just trying to just continue on the hype, build on the hype, right?
Effing clue, dude.
What was the point of this? I mean,
it was. I think it was issuing a secondary without really issuing a secondary. You know, I kind of deal. I don't know.
Wow.
The whole thing. I mean, it was just hype and garbage. I remember that. I can't even remember, but Ape stood for something. Yeah.
How do we get away? Well, not we, but how do people get away with this type of nonsense? Just come up with a tick out of nowhere at around this thing opened up.
It's amazing who can. I'll tell you that it is amazing how some people in very high positions make stupid ideas. I remember when the ape thing happened, and they had that share class introduced, and there was like a big time fund manager talking about this great trade he put on, and he was long Ape and short AMC. That didn't work out.
That's not doing too well. I just, it amazes me how I just don't understand. I don't understand. So yeah, there's Ape for you guys. 83 cents, opening up at that time at $6, hitting 11, now 83 cents, and on a continuous down burning trend here. So AMC, we'll look at that tomorrow or tonight, guys. I don't expect anything to happen today unless they get amazing volume. Neo, guys, a good volume today, 1.4. It's another one that I like as well, next to XPEV. And then I'm not going to go through every single one of these tickers here. I'm just going to look at Baba next, which is another one that's one of my favorites when it comes to this. And Baba up 3.7. Okay, volume, not great. I'm going to put them as a possible. We can come back and look at that in a second. We'll skip PDD. DVN is, what is this? DVN is up 2.8. Oh, it's energy. Doesn't trade well.
Nat gas.
Yeah, doesn't trade well. So I'm going to keep this one off. It's tradable, but just be careful on that one. JD, no volume. Affirm, no volume. Pretty light right there, up 2.5. Oxy's pre-market actually looks good. This is good for them because they barely do anything. They're actually up 2.6 with 148,000. So yeah, let's put Oxy on our list today. XOM on here. You can decide which one is best for you out of those two. Snap, no volume on Snap, and AFIRM's coming down, I see here. Yeah, and then coin on this list, not doing a whole lot. So very light volume. So a lot on here, but not a lot that looks great. And majority of it is on the Chinese news lockdown, I guess easing off, continuing to ease off there, making some stocks pop up a little bit. So Norm, anything you like this morning? No, it's not a lot to choose from. Let's take it to our room here. Dave from Connecticut. Ape should be auto trigger on your dumpster fire. Yeah, I agree. I'm gonna try to program that the minute I pull up that ticker, that the garbage can comes up immediately. I mean, this is just madness. Great idea, Dave. We'll get that set up. All right, what else we have here, guys? AMC, Oxy. Yeah, Oxy's good. I like Oxy today. Oxy looks good, very active, and that whole sector is in play. Looks like this morning. And Michael giving us Tesla. Yeah, Tesla will be one on our list was horrible yesterday, like many tickers. I think Tesla's pre-market activity was better than the actual market open. And it was. Yeah, it was. It was really actually moving well. Market opens and and it's just look at this nastiness, right? So today already good volume, almost hitting that 2 million mark there, and down 1%. Was down a little bit more, so kind of climbing from the lows of the pre-market today. Very active on a nice downtrend here on the daily, though has been very weak. Might be trying to retest this 167 level we had previously. So yeah, we'll leave that there. Tesla is good, guys. Is Momo garbage? No, Momo is, it could be garbage. I mean, this is one of those stocks that I don't know when it was that it was really not in play, but it was really hot. People kept trading it and just kept popping up with volume. But I have not seen this in play in a very long time, and I don't think today looks great neither. So, yeah. Meta has volume. Let's take a look what Meta is up to today. So here's Meta. Yeah, 250. I mean, for them, that's okay. It's not great, right? It's not over something that's above and beyond here. But I'm not seeing anything that puts them on our list. Maybe a possible. Again, a lot of these tickers, guys, that don't really have their own independent catalyst, so they're not really in play. Besides, like Neo, XPEP, these guys are up slightly with some good volume. Billy, right? That's up as well, 10%, which is good. Oxy, the oil sector's in play. And Tesla's it's just all over the place as far as volume, right? It's pushing a lot of volume every single day here. So getting a nice bounce. Let's mark the pre-market low here since we're there now. 170 looks like pre-market low there. So yeah, there's not really a lot that's in play, but we'll find something to trade if we get a better day than yesterday, hopefully. BYND, and also keep in mind, take what the market gives you, right? Many times when these type of market conditions, you're not going to get great continuation, but you still can catch a good 50, 40 cents depending on what you're trading. So, just take advantage of that. Here's BYND. No, not really in play, guys. Had a decent day yesterday. Probably one of the few stocks that did not sell off or go sideways here, but for the most part, not really in play at the moment. $15, man. Look at that. Look at that. RXDX, what did that risky taker do yesterday? Sold off. It actually didn't do anything. It didn't do anything, right? I didn't watch it. This is the market open here. I didn't, man. Look at this. This is pure garbage, guys. I wouldn't be watching this at all. And
How do you really feel?
yeah, and the fact that it didn't sell off is even scarier, right? That it actually didn't sell down. So yeah, don't touch this, man. This is dangerous stuff. BYD pump and dump. Yeah, they're pump and dumping their burgers, that's for sure. I don't know about the ticker though. I'm not sure about that. Yeah, I don't know if that's a pump and dump actually. I don't think it is, right? Not BYD. Isn't what's their float, by the way? BYD, what's their float? They're 57. Yeah, it's not a low
I
float.
do have high short float. Somebody's saying it's a squeeze play potentially. I don't think it will be.
Yeah, I could see that
I've
happening
seen
more than a
short.
pump and dump.
If something's
but-
truly garbage, I've seen it have higher short float. Look at Carvana.
Oh, mhm.
People have been saying Carvana's a squeeze play since it was 30.
Yeah, there was a ticker CVAN. What
NA.
did it do? Yeah, it dropped yesterday. Yeah, I remember seeing
It's
the
gonna keep
drop
going.
here. Look at that, man. Scary stuff. Continuation play, maybe. I mean, it's to the
It's
point
not
where
worth it, guys.
it's so low now that it can, you can get these type of moves. You look at this move, right? This makes no sense. It's just gonna be very erratic. It's just at the point where you just don't know what to expect on this thing, right? So just be careful. I don't like the price here at $4 neither for this ticker. All right, anything else, guys? How about over on our YouTube chat? And over on YouTube, if you haven't done so already, hit that thumbs up, especially for Jared engineering the markets every morning starting at 8 a.m. Except for Fridays. So Fridays.
I'll tell you, I know that from experience about the squeeze stuff. I'm not saying it can't squeeze. I'm not saying 100% it won't, but don't expect something to squeeze just because it has high short interest. I tried that trade 12, 13 years ago. Didn't work. Thing had like ticker I traded. I took it because it was down a decent amount. Had It wasn't a huge trade. It didn't kill me or anything, but it was a longer term trade. It was not a day trade.
Yeah.
And thinking, oh, this thing's got 60% short interest. It's down half. That doesn't mean it has to go up ever.
Right.
Trust me.
Yeah. Yep. Agreed. Did we look at GSK? We looked at that yesterday, and I wasn't impressed with that. GSK, it just trades horrible. In fact, let's look how it traded yesterday. I mean,
No.
yesterday almost everything traded horrible, but this is just, no, I'm not a fan. So careful on this. And this morning, it looks pretty ugly as well.
Almost anything you pick up that's a UK-based stock is going to trade like garbage.
Yeah, pretty much.
Especially a UK-based mega cap, huge float, 2 billion share float drug company.
The drug company, I remember
generally
that.
not going to trade well.
Yep. So not a fan of that. Crowd, good move at the open yesterday, 130 RVol. Yeah, right now though, had a good move, kind of decent move there. I mean, but again, I don't like this chart for the way I trade. This is not great for me. Right now, guys, not really in play. 14,000 shares traded, so not a whole lot going on there. Shopify, we'll do 2 more Shopify, and we'll do actually 3 more Shopify, and some other ones you guys are throwing out here. So let's look at Shop. Anything exciting on Shop? No, nothing that I can see. Has okay value, but
just kind of, we've had some good weeks going back, and now we're just kind of in
yeah, it was just like, you had your fun. And
take it for granted.
Yeah, I agree. Just take what the market gives you. Don't force it. This is when you really don't want to force it, right? Don't compare
absolutely
what you did 2 months ago. We're doing in November starts
early
down
November
a little bit, but early November, man, that was amazing
it was great.
trading. So don't expect those numbers at the end of this
It'll
month.
come back. Wait
unless we get the Santa Claus rally. Cut R, no. Cut this off your list, man. This is just no, not looking good. And the last one here, EXPR. EXPR, is that EXPR Express? No, sorry, I'm looking at the wrong ticker.
They had earnings this morning. They had a wider loss than anticipated.
I don't like the price of this. I don't like this price at $2. They're moving. They're in play for sure, guys. 5.1 million. But for me personally, this is too low of a
penny
price.
stock.
Yeah. So not is this Express like the clothing company, the retail?
Indeed.
Okay. Yeah. All right. So careful with that, guys. Why are UK-based companies so bad to trade? Is it the time, the liquidity norm?
No. Well, the primary reason they're bad to trade is because of foreign exchange and currency issues. That's one of the main reasons. There are other things, but that's one of the biggest.
Yeah. And not just
I don't know if GSK is dual listed. Sometimes they'll have multiple listings too.
Yeah.
Another thing, China, the reason, and it's not just UK. UK, for whatever reason, is generally terrible when you're looking at charts. Other European tickers are as well. Almost anything that is foreign trades not quite as well because of some of those foreign exchange things. The one difference, and we have it on our list every day, and people trade it a lot, is China. China, you don't have the foreign exchange thing because the way their whole financial system and currency is set up. So we won't get into it. You can read about it if you'd like, but there's a big difference between how that works with China and the rest of the world as far as currency. So it kind of limits the ugliness of the Chinese tickers.
That daily gap up and down that we're seeing on a lot of foreign tickers. All right, guys, let's get to it. Let's look at our community events coming up for next week. Head over to bearwithtraders.com/webinar or click on webinars at the top here. You can see what's coming up for the next 2 weeks.
All right, absolutely. Onboarding and technology with Carlos every Monday night, 8 p.m. Eastern. Be sure to check that out, especially for newer traders. Mike's usually there as well, helping out. get your feet wet, learn all about BBT and how to get started. Then on Tuesday, we reserve that for strategy. Next week, we've got Thor talking about managing the trader, not the trade, how to know if your system's working, and being in control of yourself. Following week, we've got John on the 20th at 8 p.m. talking about resetting your trading life. And getting over some humps and hurdles and everything else. Wednesdays, we have strategy. Next week, we have Mike talking about the pathway to become a successful trader and the challenges that come along with it. So that time needs to be changed. It has 5 p.m. instead of 8 p.m. because that was Creta, but I will get that fixed. And then the following week, Mike again, double dose of Mike here, it seems. Interaction between Tradebook and trading psychology. The mentorship on Thursday with John at 11 and Thor at 8. If you're not already in tradingterminal.com, be sure to go check that out. We are developing that, working very hard to make that tool as good as it can be, adding all kinds of stuff to it. You got tools that people pay thousands of dollars a year for free, from scanners to charting to replay simulator, everything else. So be sure to check that out at tradingterminal.com. Then if you're watching on YouTube, you haven't been in the room, you'd like to try it out, go to bearbulltraders.com, scroll down about halfway down the page. You will see that intro button on the far left on the membership chart. If you click that, when you go there, you can use the promo code PreMarket24. That is PreMarket24. No hyphens, no spaces, and the number is 24 at the end. You'll get a discount. It is a one-time payment, does not recur. It'll be $24 for 7 calendar days, 5 trading days in the room. And if you'd like to become an elite member, you can use the promo code HOLIDAYS50 to get half off the elite annual membership. Last chance, because at the beginning, at that rate, we will be increasing. Unfortunately, we have to. Our vendors are increasing stuff on us and have been, and we've held back as long as we can, but we've got to increase the membership rate at the beginning of next year, so you can lock that in. That's all I got.
All right. Thank you very much, Norm. All right, guys, let's get to our very small and tight list over here.
I'll be focusing on the gap down list today.
Yes. Right here, guys. It should have like a pillow here. It should be like a little symbol of going back to your bed. Like a pillow. Yeah.
Well, I've got a bunch of stuff I have to build today. It's my son's birthday, so I've
today?
got stuff
Nice,
I got to
nice.
I've got all kinds of stuff I got to put together and do. So it's fine for me to not be crazy busy trading all day.
Yeah, absolutely, man. Absolutely. That'll be more fun than watching this, I think. We'll see how things go here, guys. But happy birthday to your son, man.
Thank
hope
you.
you guys have a great day. Guys, we have Billy, we have XPEV, we have Neo, we have Oxy, and we have Tesla on deck, which again, Tesla, very, very active. And it's funny, Tesla had a better pre-market activity than actual trading at the market open. So we're seeing some good pre-market action now. Let's hope the market doesn't hijack things and make things go sideways and choppy like it did yesterday. Let's do some levels for these top 5 that I have here on my list. Our secondary list, I got a couple on here that could be interesting. 2 of them being overseas tickers from China here, Lee and Baba. But I also have XPEV and Neo up here as my main ones. But you could pick from a bunch of these. There's a ton that you can select from when it comes to those, that catalyst at least. So let's start with Billy. Billy, guys, very impressed with the volume right now, 1.7. It is up 8.3. So this is probably the best volume I've seen on Billy in quite some time pre-market, it feels like. And also in the last couple of days, right, especially the 29th here, we've seen an increase in volume. And this is when things started easing off as far as the COVID lockdown over in China. So we've seen an increase in volume there, and we've seen some rather good moves as well. So love the daily on Billy, selling off from the highs a little bit now, but I think we can get some good opportunities today. I haven't traded this one in a very long time, but today's setting up for possibly some opportunities. 24.44 is the high of the pre-market, the low of the pre-market over at 22.97. And you got a couple of levels here. I'm actually going to mark down this 23.83 is worth marking down here in the pre-market. You have a lot of touches happening there at the moment. So let's see where this goes. If we get another range, we can put another level as well. But right now, I like what Billy is doing at the moment. So that is good. Towards the bottom, plenty of stuff. Do not need to add anything. Let's look to the left and see what we have towards the top here. Let's right over here about 25.40 looks like. 25.40, another level on the daily. Not the best daily, right? And this is kind of like when we talk about these overseas tickers, their daily can be very choppy at times. You got stuff like Neo and Baba, which trade a little bit better because they get so much volume. But mostly this, you could tell here how small these candles are and the actual movement on Billy. Big difference, guys, in probably like the last month or so when it comes to their daily candles. Look how wide they're getting compared to these little dots here that you had always since September, since you started dropping here. That's about the time that a lot of the Chinese tickers started taking the hit, right? So let's see. Hopefully, Billy can give us a great opportunity today. Looking forward to that one. XBEV, almost 1 million shares traded. Also, same thing here. Slight increase in volume. Daily's looking very nice as well for a possible retest of these highs if the market has it in play for us. So here we go. 11,474 is your high of your pre-market. Your low of your pre-market down at 1138. And then you're surrounded by the highs and lows of the last 2 trading days. And I don't think you need to add anything else, guys. I think you're pretty much set. Tons of levels, both up and down here from the price action. Great volume today. Let's see how that's going to be like that one there. Here's Neo. Actually, XBEV looks better than Neo today. So interesting. High of the pre-market on Neo is 1314. The low of the pre-market down at 1283. And for Neo, I'm only going to mark down one level above the price action now, which is going to be this one here, 1370. So right now you're kind of smack in the middle of all this action here, highs and lows from the last 2 trading days, previous day close, just a whole lot going on there, as you can see. I just added the high and low within this range at the moment. We'd love to see a breakout, hopefully towards the top side. 1370 would be nice to test on Neo if we can get a continuation. Oxy, guys, very active this morning, 167,000. So oil is in play. These guys are in play. They don't give you, remember, these guys don't give you a great pre-market activity, but they can trade very well at the market open. So at the moment, sitting at up 2.3. Not much volume, but again, that can change. 64.29 low of the pre-market. Your high at 65.60. And you got a couple of levels here towards the bottom, especially great area of support there. Previous day close, the lows for the last 2 trading days. And then you're slamming against the highs of the last 2 trading days as well here, or at least the 1 trading day at the moment. So looking good there. Oxy has been fun for us. It went on a stretch where it didn't trade very well. But it's starting to pick up again here on the last couple of days. So let's see how that's going to be. 62.59 towards the bottom, good level of support in case we lose this previous day close, right? And this thing in the last couple of days, you can see the sell-off some sell-offs have been pretty aggressive here. So that's 62.59. Good to have that there if we are looking to sell off into the market open, or at least after the market open. Tesla, our good buddy Tesla has been really good to trade. Right now, low of the pre-market at exactly 170, and all you need to mark down is below that level at 166.29, which is your recent low here. End of December there, mid-December November 21st. And towards the top, you have your highs and lows, previous day close. I mean, I don't think you really, you don't need to add anything else, guys. Just your low of the pre-market, and then your high of the pre-market is pretty much smacking in the center of the low of 2 days ago. So you're set there. But tons of pre-market activity right now. We're trading 2.1 million shares and down 1.5 on Tesla. So very nice. Carlos, do we do levels on Baba? Yeah, we can. Yes, we can do levels on Baba. So I don't think you need to add much though, right? If I remove the stuff we had from yesterday, looking at this here, I'm going to start with the high of the pre-market, 91.85, and then we have our low at 90.52. Once you slam those 2 there, I mean, towards the bottom, you just can't fit anything else, even if you wanted to. Just plenty of stuff down here already. And then towards the top, you have the highs for the last, the high of the last trading day or 2 days ago, and then you have this level over here as well. If we were to run towards the bottom, you're set. If we were to run and break out from the recent highs, what's the next level we have here? Okay, right over here. We got it all between August, September, little bit of October maybe. Let's zoom in here. And so this is the stuff we have now, right? All our highs and lows, pre-market high. And then over here, the next best level I see is going to be this 95.15. 95.15 seems to have the most touches on here as far as the daily goes. Right over here, here, a couple of over here, and then oh, pretty close, but not quite. So 95.15 is what you want to go with if this thing does decide to break out. So that's the major level. You got a minor level in here as well. I wouldn't put too much weight on this, but it's good to have because the chances of this thing running from 92.50 to 95.15 are very, very slim, especially with the way this overall market is trading. You're not getting that great continuation. We didn't get it yesterday on Amazon. Me and Paris were both looking for that continuation, and we did not get it. Still got a decent trade out of this, but man, it's just it wouldn't give you that continuation above this 89, right? So again, great setup without looking at all this garbage that happened after. Great setup there, open range 5 minute. You just didn't get the continuation. Look at this drop. So many of us were out here because just one thing to be mindful of, of the 1 minute. The 1 minute can give you a lot of information. And what a lot of us saw here is that look at this sign, just cannot make a new high. That is not a good deal. I think I took everything out here and glad I did because look at this drop, right? So pay attention to the signs, what the stock is giving you as it is building up there. So we'll see. I don't expect a great continuation day today. So I'll be very aggressive with my partials. I could be wrong, but I'd rather be wrong on that than let stuff come back to me with a lot of shares on board. So um, aggressive into the market tells me, okay, it's time to be a little more patient and let things run a little bit. Let the kind of the price action give you that continuation. But right now, we're not seeing it. We're definitely not seeing it. And that's okay. That's okay, right? We're not always going to have blockbuster market activity. Long some Nvidia, not a lot. So Nvidia is his username. So Nvidia is long some Nvidia. Yeah, cool. Guys, anything else? Any questions? We're done pretty early today because it's not a whole lot to look at. I'm going to move up our gappers list here. And I don't see anything else that's making some noise at the moment. Snap is why does Snap keep coming up on our list? Snap is just horrible. Um, why is this stuff coming up on our list? Snap. Let's go look at it, and then we'll look at Apple as well. Um, it's just nasty. I don't know why this thing is on here. All right, let's look at Apple. Apple today. Yeah, good pre-market activity on Apple this morning. Up 1.2. Volume not as high as we've seen in the past. But yeah, nice ABCD patterns. I agree with okay volume. Yeah, I can agree with that as well. So 1, 2, 3, 4, 5. Yeah, we can add Apple to our list. We have space. Let's put Apple there. One of our usual suspects. How about AMD? Similar activity. Actually more volume than Apple. So AMD getting more volume than it did yesterday in the pre-market. Same with let me see if Nvidia is getting decent volume as well. Nvidia still light volume on Nvidia this morning. Amazon, we didn't add. Yeah, we looked at Amazon, but we didn't add it to our list. Very similar. I mean, guys, Apple, Amazon, AMD, they're all just very similar pre-market action at the moment. And I assume, like we saw yesterday, it's just overall SPY stuff, right? So this is why looking at this guy is so critical because they're just doing whatever he's doing or she, whatever this thing is. And then here, if we look at yesterday's action, this is what we got. Amazon, this is exactly what we got on all these tickers that do not have their own catalyst, right? BYND for some reason had other plans yesterday. BYND did actually popped up here and kept going, so they had their own agenda in place. But for the most part, everything else that we had on the list wasn't doing a whole lot. A good Apple trade each day keeps the day job at bay. Absolutely, absolutely. I mean, no, I don't want to say that because I don't want to give the wrong impression. But I think you guys are mature enough to understand that what I mean by this. So yeah, I'll say it anyways. Who cares? You know, Making money, guys, in trading is very easy. Making a reasonable amount is very easy. Once you learn the technicals and once you get through the psychology crap where you just can't figure things out and you get you kind of get around your own sabotages, right? Once you start learning that, making a reasonable amount is very, very simple. Very, very simple, right? And it can keep a job away if you can stay focused on making a reasonable amount and then increasing as you get more experience, right? Don't force that increase of risking more to make more, right? So yeah, yeah, the psychology stuff is the one that prevents you from moving forward as fast as you would like. Absolutely, absolutely. So a good apple. Okay, I'm 3 months in, and I do 4 days really good profits, then one bad day that takes the week's. That's man, that's what happens to a lot of traders, Jack. That's Jack Cass. What happens to a lot of traders? They give back, and not just a week. They give back a month of profit for being hard hitting. That's all psychology. This is why we spend so much resources on psychology in our community, because if there's a secret to trading, that is it. Once you learn the technicals, once you learn the technology, the rest is all your mindset. It's all about controlling your trade, your trading mindset. And once you can do that, man, it's sky's the limit. Sky's the limit. And not be greedy, Lou. Agree. You cannot be greedy, and not even just greedy. You just got to be humble. You got to be humble really quickly. And if you don't humble yourself, trust me, the market will do that for you. It will humble you very, very quick. Yeah, Tom Hogarth. Yeah, he's really good. I've seen some. I haven't read his book, Jeff P, but he's really good on some of the videos I've seen from him. His approach is very unique. Very unique. Nvidia, absolutely, absolutely. It doesn't come early, so many of my friends don't understand this and have dropped because they want to pay. They don't want to pay their dues in time. Yeah, people don't want to. They don't want to pay their dues, and it's not their fault. We're building a system where everything is instant, right? And we fall into that even without noticing it, right? Everything is instant gratification, right? And I use this example, something as simple as ordering something online that you actually are paying for. You expect it in 2 days, 3 days. If it takes longer than that, then there's a problem. So we're just used to this instant gratification. Even in jobs, right? In jobs, you get paid what, at least at worst every 15 days, right? So it's like everything is instant gratification. So when it comes to trading, it's the same thing. People want to see that, and that's not the case. That's not the case. 99%. Yeah, I think losing money is part of the learning process at the beginning. It really is. You have to. But that's like paying your tuition, right? That's like paying your tuition. That's like paying your rent. It's part of the business. Um, this is why we tell traders you got to start small, because at the beginning you are going to lose money. But if you can control how much you lose as you're learning, that's a big, big benefit to you. Lou, I do not use them, the Camarilla pivot points. They're great. I've seen traders take some good trades off of it, but I don't use them myself. All right, we got their moderators with their list. We got Thor, Jared, Megan, Peter. Let's see some more come in. And as we do this, guys, hit that thumbs up over on YouTube. We really, really appreciate it. It does help out the channel a ton. Sitting at 125 likes. We'd love to get over 200. Yesterday we got to like 189. I created like three accounts under my name to try to get to 200, and I wasn't able to. So, yeah, let's see what happens. Yeah, I created a few accounts. I had like mine. I had, told my wife, sent her the link and did all kinds of stuff, and it just couldn't get there. No, I'm kidding, guys. The effort to create accounts, I can imagine that's brutal. All right, guys, we are set. We got a couple of minutes here. Our list recap: we got Billy, XBEV, Neo, Oxy, Tesla, and Apple. And Apple's looking down a little bit. That was going to be higher. Looking okay. Very active right now. 730,000. So really like this one for today. But I'm looking at look at Billy's drop. I'm looking at Billy and like what I'm seeing here. I think Billy will be a good one for today. This is really in play. XBEV, Neo, all these three with great volume. But Billy seems to be the one that I'm going to be really focused on. They're up 8% still. Even after this drop from the highs, they're still up 8% with almost 2 million shares traded. So that's good there. He says, ain't that where Norm goes in the morning? He drops off the camera and starts liking the show and putting accounts. No, we don't do that. I find it hard. I find it hard. Part many times. I find the hard part many times to be trading a smaller account size, a great set of market conditions, not being able to take the right size to really justify the setup. Jay, I hear you, man. I hear you, but don't focus too much on the size of when you're trading first. I mean, I get it. I get it 100%. You got to be capitalized a certain amount to really take advantage of things. This is why you got to really be realistic about the returns, right? Be realistic about the returns and even and if you have a big account, because some traders start with 50, 60, $100,000, be realistic as well. Don't expect 1%, right? Because 1% of $40,000 is $400. You're not gonna make that when you start out, right? But be realistic, right? You got to build that experience because you see that number out there. Oh, just make 1%. Yeah, that's for an experienced trader, right? That's for an experienced trader. You can make 1% a day easily, but you build up to that, right? If you can make half a percent, a quarter, it's you build up to that. So the Chinese tickers are in play. They're all up today. I got XBEV. If you look at the whole list, they're all up today. I just think it's overall China just kind of easing off their COVID restrictions. So everything is up here except for Billy. Billy does have an upgrade. This is why I like Billy today. They did get an upgrade this morning or last night, and they're moving up pretty well with some significant volume. I mean, when was the last time you saw Billy doing more than Neo and XBEV on this volume, right? It's not often you see that. All right, let's bring over the moderators list. Let's go ahead and do this and disable this video. We'll bring this over. Then Brian and Andrew are up next trading live for us, guys. Let's go ahead and bring the moderators list here. Okay, we'll wait for Brian to come in with his buzzer beater if we can get him as well. Why did I do that? Okay, here we go. All right, there we go. So on our list, guys, we have this morning Thor's looking at XOM, Oxy, and CVX. Also some energy oil plays there. Spy, Tesla, and the Qs for him as well. Jerry looking at PayPal, Tesla, and Billy, and energy stocks on the secondary. Megan looking at Shop and SCIEN. Peter, IPOs for today, SODR, and Peter's list, AMD, Apple, and Tesla. Secondary list, Baba, Billy, and Neo this morning. So there you have it, guys. I'll wait for, there it is. Brian, the man of the hour, is looking at Apple, Tesla, Baba, XBEV, and some of the indexes as well for Brian. So guys, there you have it. Trade safe today. Again, just remember, I know it's not Friday, but let me remind you, just take it easy today. You might not be able to step on the gas and floor it this morning, but there will be some opportunities. Just be mindful that you might not get the continuation like we are used to getting, right? Early November, we were used to getting these great continuations, like everything we had in play just ran nicely. We're not seeing that in the last couple of days. So just be mindful of that. Maybe adjust your trading style a little bit to, to adapt to the market conditions. Very, very important. Keep that flexibility. So Billy, XBEV, Neo, Oxy, Tesla, and Apple on our list. Guys, have an amazing day over on YouTube. We're going to continue here in our chat, and I'll see you guys tomorrow. Tomorrow we start at 8:30 on YouTube. No engineering the markets as it is Friday. So we'll see you then, guys. Have a great Thursday.